dollar's gotten a little bit weaker in the last several weeks against the euro, for example. And the most important price in the world is the dollar euro rate. Those are the two most important currencies. So the answer is yes, but not really a big deal. A lot of it's in the market and really hasn't moved very much, and the dollar remains very strong. I don't anticipate really a big deal because everyone is anticipating that the Fed is going to cut the federal funds rate, and it looks like this September meeting now, if you look at the Chicago Mercantile Exchange, it's about 50-50. About half the people participating in that market think there's going to be a 25 basis point cut in the federal funds rate, and the other half thinks it'll be 50 basis points. So that's kind of baked in the cake. That's been in the market even before the Jackson Hole speech of Powell. And it really came into the market big time when they had the huge revision in the employment in the United States. It turns out, there are about 800,000 jobs were just not there. I mean, they revised the count way down, 27% reduction in that job count. The money supply has been contracting in the United States. It's the stock of money in the United States measured by M2 is lower now than it was in July of 2022. And as I've indicated before, that's only occurred, those contractions since 1913 when the Fed was set up, only 4 times. And each one of those 4 occasions for money contraction was followed by a recession. One of the 4 cases was actually 1929 to 1933. We had a Great Depression. We didn't have a recession. We had a Great Depression. So John Greenwood and I have consistently said with these monetary contractions and monetarism and the quantity theory of money, and as a monetarist, our conclusion is that things are going to slow down. We're going to be in recession territory late this year, early next year. So the jobs reduction didn't surprise me at all. It just confirmed what I've been basically saying. The spin doctors will be in full gear. And by the way, coming back to Powell and Jackson Hole, his speech was interesting in the sense that he claims, and he's getting by with this in the press, by the way, that inflation was caused by distortions that were associated with the pandemic. That's what he said. Now, what that means is, remember the old supply chain glitches that supposedly caused inflation? No, it's all about the money supply. He didn't say anything about changes in the money supply, which he's responsible for. And what happened? In February, we had February of 2020. February of 2021, the money supply, M2, was growing at an annual rate of 27%. That's a record. And no wonder that was followed by inflation. If the money supply gets goosed like that, you always have inflation following it with a lag. And that's exactly what we happened. He was full of propaganda, absolute baloney of the highest order, putting his finger on the cause of inflation as being distortions that were associated with the pandemic. The Fed never predicted what was going to happen with inflation. John Greenwood and I predicted what was happening with inflation. We said it would go up to as high as 9%. It went up to 9.1%. So, the proof of the pudding is in the eating. The end of this year, Greenwood and I have it at 2.5 to 3%. That's the CPI headline number. And right now it's at 2.9%. So it's very, very clearly we're going to hit the bottom of the park again by paying attention. The economy's fuel, money, and we're running on fumes now. The money supply has been contracting. Even on a year-over-year basis, it's only growing, a little over 1%. Statements are kind of fuzzy, if I can use that term. So we don't know exactly the form that the 25 grand is going to come in, but let's just call it's going to be a gift. And where's the money for the gift going to come from? It's going to come from people like that pay taxes in the United States. It's a little like, I would call it theft, because who buying a home has the right to receive $25,000 credit, check, cash, whatever form it comes in, from somebody a taxpayer who hasn't even agreed to the thing. That usually, if someone walks up and they say, I have the right to have $25,000 and could you open your wallet and give me 25 grand? That's usually called theft. We don't know where the money is going to come from specifically, but it will come from taxpayers. I can guarantee you that. Whether it's corporate or individual, we don't really know. Well, it would change, let's not call it inflationary, it would change the relative prices of things. And assuming everything else is constant, as they used to always like to use a Latin phrase, ceteris paribus, in economics. Ceteris paribus, what happens? You give somebody extra cash to buy more real estate, and the demand for real estate goes up, and the prices are going up, not down. So then she comes in with the other hand and says, well, I'm going to control this. I'm going to have laws that control the price increases somehow. I was reminded, somebody just dug out, one of my former colleagues was doing a historical check in the Baltimore Sun and came across the first op-ed I ever wrote in the Baltimore Sun was an article in which I laid out the stupidity of rent controls. I don't have it in front of me right now, but it was in the early 1980s. And the conclusion was rent controls are bad. They mess up the housing market and distort things enormously. And from an economic point of view, they're a bad deal. Wherever we've had rent controls, and ironically, you usually end up with a housing shortage. This is one of these things in economics of waving a magic wand and coming up with a story and scenario. This is baloney of the highest order. This is very misguided, by the way, and even the liberal press, the New York Times, for example, and Washington Post, democratically controlled, shall we say, or heavily influenced. Both of those papers slammed this as being nonsense. It's just blatant nonsense. Even the press that's supporting her had to come down pretty heavy against this as kind of a harebrained idea. We have a backlog of inventory and housing in the United States. This is the one reason, by the way, for years I've been bullish on home builders, stocks and equities and home builders, because of this backlog of housing that has to be theoretically. Now, the problem is that you have a tremendous amount of resistance or sand in the gears because you have all kinds of local regulations and zoning order mandates and so forth that slow and constrain the supply. Think of it as a supply and demand curve. They're shifting the supply curve to the left all the time, but that's local. Most of it is not federal. Most of these things are local. For example, in Maryland, if one of our border states, as you know, is Delaware. So if you go on the eastern shore of Maryland and you're driving across Maryland, you don't see very many new homes being built because the cost of all the regulations and government mandates are very high in Maryland. You cross the border into Delaware where the regulations are a lot lighter and you find all kinds of new houses being built. This is a classic Trudeau move of shooting himself in the foot, if not the head. He's a big greenie. He wants to go to a green transition. He's made all kinds of promises. And as part of that, of course, EVs, electric cars. And then the place where that's producing a lot of high quality, inexpensive electric cars is what? China. And now he's basically going to double the price of those Chinese cars that are supposed to be in the interest of going green. So the policy is completely contradictory. With Trudeau, that's nothing new. And with many politicians, by the way, it's nothing new. So that's one thing. The retaliation, we can see it, what they're doing right now. The big headline in today's Financial Times, and today we're speaking of what? Chinese export curbs on key minerals threaten Western chip makers' output. Germanium and gallium prices doubled overnight because they've put a squeeze on these things. Last week, they put restrictions on antimony. The Chinese have an ace up their sleeve, and the ace up their sleeve are minerals. Most people don't realize that the Chinese dominate in the fields of mining, metallurgy, and material science. If you look at the university rankings, for example, in mining, metallurgy, and material science, they rank very highly and are dominant in China. The Chinese come in at the top of the heap if you look at those areas areas in the educational system. The other departments, the other areas in China don't even show up in the top 500. In those three M's, what I call the three M's, mining, metallurgy, and material science, they dominate the top 10. So in 1992, the Chinese actually, in a bulletin, said that they were going to use critical materials to counterattack the West, suppressing China. So that's the answer to your question with some precision. And protectionism will either lead to a horrible end or horror without end, one of the two. Take your pick. Would you like a horrible end or a horror without end?